Uh, So the title today is wrong again, and it's a reflection of both the forecast of the midterms and all the things I've gotten wrong over the last couple of years on these calls. So we'll cover a couple of them today as well. But I want to just cover three things: the financial stresses in the system, the midterm results, and then touch on inflation and the two faces of inflation that we're seeing. I've shown this chart quite a bit over the last couple months, and whenever the Fed goes through tightening cycles in the past, something has gotten broken during that time. And right now, we've had a couple things that are on the edge of breaking, if not having broken. Whether it was the China property market, which they've taken some big steps in the last couple of days to address and add to their 20-point plan for the COVID. And you could see some reopening coming, which could be quite exciting, but it could also be a challenge with the property issues that they're having. You had the LDI pension investments in the UK under stress because of the dramatic move in rates. And then obviously what's on everyone's mind right now is the FTX issues of the last couple of days and the ongoing crypto issues. And I don't know where the problem's going to be, but clearly when you have tightening in as short a period of time and as significant a tightening as we've seen, something typically breaks. And clearly right now it's in the crypto area, but earlier in the year we had the NASDAQ down 27%. So there have been places where the stresses are appearing. I think this is one of the things we have to keep an eye on to make sure that, given the amount of debt in the system and the amount of liabilities that exist on that debt and the dramatic move up in rates, we have to expect that there'll be more breakage in the system. You just have to hope it's not something more sustainable like a Lehman, and it's something that's more short-term oriented and more cyclical in nature. But I want to switch gears to the midterms for a minute. And this is one of the areas where the polls certainly got it wrong, but I think in this case they got it right. And I believe one of the challenges with this midterm for both parties was that neither one of the parties had their candidates explain well what their plans are, their visions are for the country. And without that, it's really hard to get people to be motivated. What got people motivated this time was inflation and crime, as well as the abortion rights issues and concerns about democracy overall. But this is really an unusual election in the things that they were expecting, particularly with the incumbent party doing as well as it did in this one, was not anticipated at all. So the key takeaways are there was no red wave. We are still a 50-50 country, but I think the really interesting parts get to when you get below the headlines. And what happened really inside the Republican Party is the moderate candidates did much better than the MAGA candidates. And that means it wasn't a good night for Trump, but it really wasn't a great night for Biden either. And I would say the outcome of this put the Democrats in a pretty tough spot, because you're likely to have Trump announce he's going to run today, trying to keep the field on the Republican side narrow. He's already attacking DeSantis. But for the Democrats, they got to decide, is Biden the guy for the next 4 years, starting in 2024, or do they go in a different direction? And I don't think this election gave you a good sense either way. But I do think from a policy perspective, it's going to be very hard to get new tax hikes through. There will be some of the sunsetting of provisions and stuff that are going to be a fight inside Congress. And I doubt there'll be any new fiscal stimulus coming that's in a meaningful way. But what is interesting is there is some agreement between the parties on Ukraine and China. President Biden's taken a very tough stance, continuing the stance that President Trump took towards China, and their meeting yesterday with Xi was an important one. I'm not sure you could declare anything other than they had a 3-hour meeting and they've made commitments to try and get the relationship back on track. But I don't think that really is at the core here. I think the US-China relations are going to be much deeper and more meaningful in terms of where they stand in the overall scheme of importance. I think they'll be right at the top. Switching gears to Frank Luntz, we did a call with Frank. Many of you were on it, but clearly his takeaways were this election was a strong rebuke of President Trump. that the voters wanted to get back to practical governing and not this bipartisan nonsense that's been going on. They don't want the ideology or the political bias. They want productive solutions. The other thing that Frank was very focused on was Trump had too many unelectable candidates that really had no place in running for office compared to other candidates that could have won. And I think that in general, voters are fed up. And for the Republicans, the field is wide open. I think it's not as clear on the Democrat side where we're going to go from there. So, excuse me. So switching gears, there's an interesting takeaway because what really upended this election was everyone thought Republicans get the House in a runaway and they're going to take the Senate slightly. And then that started to fade last week. As I said, the Senate was a toss-up from the polls. But after the election and before we got to where the Democrats kept the Senate, Mitt Romney did an op-ed and he basically said the Republican Party's at a fork in the road. And it's up to them to determine which way they want to deal for the next 2 years and how they're going to position the party for moving forward. And he really had a great pointer that it's a party should make a difference rather than make more noise. And around that, he wanted them to stay away from things like going after the Biden family and investigations or sending messages through bills that have no shot of getting approved or making threats about government shutdowns and the like. He wants to avoid all the issues and the things that are sideshows and get back to the business of governing. And he had a great op-ed where he listed inflation being the big issue, and his view to deal with that is very common sense oriented and very pragmatic. It starts with creating a proper immigration policy, and he focuses on the fact that we're 1 million short of the immigrants we need every year. In fact, Canada has announced that they're going to bring in, I think, 1.5 million new immigrants each year over the next 2 years, so 750 a year for a country that's 1/10 the size of the US. And we're talking about, in this case of Romney suggesting we bring in 1 million people a year, and that will only help us offset the demographic cliff that we're facing here. He also thinks we need to really increase the number of work visas in sectors that are facing critical shortages, which is a very good common sense idea and how we should be approaching that. He still believes we need to secure the border. And, you know, I'm with him. I travel to Canada once a month, and Canada has a very secure border. They're not bad people. They're among the nicest people I know. And yet we act as if securing the border here makes us a bad nation, and that's not the case. I think we really have to think about the overwhelming burden on the border states that we're creating and how we're dealing with that. So that's one element of his plan. The second is to really focus on the tariffs and how we're tariffing our allies, because that can bring down inflation as well. But he also thinks that we need to have an honest discussion with the public about entitlement spending. And it's such a big part of the spend budget, it's 2/3 of the budget, and it's on its way to bankruptcy, that it's time we start to address that, or we'll never deal with the inflation issues that we have. So we have to change the retirement ages, we have to reduce or adjust the benefits, and we have to make some adjustments to a bankrupt system, or we're just going to continue to press us through. He also thinks we need to focus on climate, but we need to do it in a smart and pragmatic way. We need to, he believes that most Americans know what good policy is, and we also know that the ideological policies on climate change and our current energy policies make no sense, and that we need to balance off the transition by combining fossils and renewables. But he will also need to bring in global solutions to this, not just domestic solutions, because when you have a country like China that's emitting so much in greenhouse gases on their own, it doesn't matter what all the other nations do if we don't get global solutions. And to do that, we need global technologies that can be adopted globally, that can be easily put into standards, so that you don't have the extra costs that go with running multiple parallel systems. And then I think the other issues that we have to get back to, and this is one of Romney's big issues, is we have to restore faith in the integrity of the elections and restore the credibility in the democracy globally. And if you don't have confidence that our elections are good, then how in the US, how can the rest of the world feel strongly about it? So I think his common sense approach was really refreshing, I think it's a playbook both parties should take a look at and really figure out where they want to go in the future, because I think both parties are at a crossroads and have to determine which way they're going to go as we move forward. So I want to switch gears to inflation. We had a number today on PPI that was very positive, but last week we had a good inflation number, which means we have a line. We have 2 points on a line, but we don't yet have a trend. But there are some positive things going on in the inflation reports. You can see core came down, PPI came down on a core side about 0.5%, on the headline about 0.3% month over month. So that's a pretty good positive for what we're looking at. And when you look at what CPI happened, what was going on in CPI last week, obviously you had energy costs pushing up a little bit, but apparel, used vehicle sales, medical services, and airline fares all helped bring down the numbers a bit. And that's part of the easing of the supply chain issues. So I just want to talk about the case for and against the inflation cooling. So the arguments for inflation not cooling stick with wages. And you just had in the UK today, I think they announced 5.7% year over year wage increases. That's pretty tough against the inflation numbers. So that has to come down to get it to a more normal level, but we're still stubbornly high on wages here. Our job openings versus the unemployed is still out of whack. I think the other thing is that people are struggling with is the easing and the stimulus that was done over the last 2 years is still working through the system. And just remember, we put $1.9 trillion in people's pockets in the last year. So that's still working through the system and still being spent. And in fact, consumers in the US saw their cash balances go from 1 trillion in 19 to 4 trillion last year due to the wealth effect and also due to the stimulus that was money being thrown out. The other issues, 2 big issues that are keeping inflation high are the green energy transition, which is inflationary in the early stages, should become less inflationary later on, and also supply chain reorientations are inflationary because you're going from the lowest, most efficient supply chain systems to the safest, most secure supply chain systems as governments are trying to figure out how to deal with protecting themselves against sanctions and against bad actors. So that's the arguments for, and you can see this in a couple of the charts here. This is the job openings per unemployed people per job openings, and that's at a really low level for the last 12 years. You can look at the wage pressures that continue to persist and push up, and you can look at the tax receipts, which reflect really strong consumer spending. And this is really, it's fascinating how for all the problems we've had in the world the last 2 years, how much the government receipts have gone because consumption has been so good because of all the stimulus that's been put into the system. And I think that stimulus and the timing of it, the lag effect, is one of the things that's really messing with people on trying to get a better sense on the inflationary numbers. So let's switch gears to the arguments for inflation cooling. It starts with we're likely in a global recession already, but M2 contracting is a big factor, and we were up about 36% last year growth in M2. That's come down to about a 6%, maybe dropping a 4% rate. The monetary tightening that we've been putting in is going to start to kick in. And we think the tightening is more than the Fed tightening because of the strength of the dollar and because of the reversal in QE to QT of basically $250 billion a month. That switch is already taking place, and that is starting to work through. I think the other thing is you're starting to see supply chain bottlenecks easing considerably, not necessarily in the energy area, but certainly in the Asia to the US and Europe supply chains. And just, I mentioned this last week, but Port of LA and Port of Long Beach at the high had about 106 ships waiting to unload, and that's down to 4 to 6. So that's a big change. We've seen a lot of demand destruction occurring. You look at the mortgage market and 7% interest rate mortgage rates, that's certainly put a damper on housing. But you've seen in the reports coming out from a lot of the retailers, inventory buildups are happening, which means we're going to have discounting going on and maybe earlier Black Fridays and the like. But I think the biggest change that's happening, and it's came very, very sudden and very hard the last couple of weeks, is the significant hiring freeze and layoff announcements that we've seen. And You have the Amazons and the big tech companies starting to lay off, which when you think about it, they're the competition for all the companies to get their productivity improvements in place, because getting good technologists is hard. When the tech companies start letting them go, it opens up for the other industries to get access to the talent they need. And that should turn us around on our productivity improvements. So I think that's one of the challenges we're faced with is productivity has dropped during this period when you would have thought it would have gone up with all the tech spend that we had going on. But now you're starting to see the real push is going to be on increasing productivity by reducing the staffs and layoffs and hiring freezes. And when you get that, you get lower pressure on wages going up. So in closing, we're in a global recession, most likely. How the parties respond to this in the US will determine what happens for the 2024 election, but more importantly, it'll determine how our country moves forward. I think the tax hikes and increased social spending are going to be put to the side for now. Modest tax hikes may come through, some social spending as we get into problems, but nothing like we've seen the last couple of years. And I think we do have a chance at a soft landing in the US right now. The CPI report followed by the PPI report are just a line right now. We need to see it become a trend, but it is certainly a positive movement. And I would say that the markets, notwithstanding the rally we've had the last 2 weeks, have created some really attractive valuations, both in the public and private markets for people to take advantage of. And I think we're going to be setting up for a lot of volatility, but a little bit more positive bias as we move forward. So Mark, I'm going to stop there and open up for comments and discussion.
What's great is after this 136 times, really like 150, we can go back and there's an evolution of Stephen Burke. Stephen Burke did not like slides. Stephen Burke did not like a lot of data. You are throwing at Addison spades as you get, and thank you. But what you always do is you give both sides of the story, which is important, particularly in today's siloed world. With that,
it's also because I don't really know the right answers.
Well, I didn't want to mention that, but now that you mentioned it,
look at the title.
No, but you're also modest, like as if you were from Ohio. Nudge, nudge. But you know, and you've been doing this since the very beginning. As we went into this the pandemic, it's been a tough one to call. Okay, with that, questions, comments?
Hey, Mark, I have a couple of questions. Steve, I actually have two, if that's okay. So first one is on, you talked a little bit about crypto and how sort of the crypto world's kind of tanking in many different ways, especially with what's recently happened with FTX. I wanted to kind of get your take on how that will affect, the regulatory environment. Crypto has been under scrutiny for a very long time with regulatory restrictions and kind of all the things the SEC has been doing. So I'm curious, like what you think, how this will impact this in the long term. And then the other question I had was from a technology perspective. And, you talked a little bit about the election and what's going to happen going forward, that this has not been, a great time for Biden or Trump. But with Elon Musk's overtake of Twitter more recently and kind of all the changes have taken place, and understanding kind of how social media has impacted, past election results and so forth. Like, what's your take on, kind of 2024 and going forward? And, obviously I've heard, and I'm sure everyone has heard, a lot of interesting conspiracy theories and sort of all these different things that could happen. And so I'm curious what your take on that is as well.
Sorry, go ahead, Stephen. Did you get that?
Yeah, I got him. On crypto, I know less about crypto now than I did 2 weeks ago. That's all I know about that. But I think there are a couple of things that I think are ironic is all the people that are, a lot of the lost money, who do you go to when you lose your money in crypto? I think the regulation is absolutely going to pick up. It has to protect the consumers. I think the irony of trying to be away from the government, and now we're moving to a period where the government's going to get more involved. I don't know how that works with the whole concept of who is behind it, but definitely more regulation. And I think it's going to, go ahead, Mark.
I was just saying transparency overall. We've been talking about that for a long time. That's why I've been on the sidelines.
Yeah, who's behind it? And you could wake up and find out that it's, bad actors all through this and we just don't know. So I think it will be a lot more regulation and I think it's not done though. The discussion we had, and I think the Bank of International Settlements had a really interesting take on this that we talked about a couple months ago, where they think it's going to be part of the ecosystem and it plays a real role in a lot of the emerging economies where the unbanked can be banked better. So I think there's a role for it. I think it's going to evolve and I think it'll definitely be more regulated. Regards to the elections and all that, I think Romney has a great point is, we've been debating elections back to 2000 and maybe even further back than that. And both parties have been doing it. And I think it's the worst thing that we could do is question the results of an election and bring into question the validity of our process for voting. It was talked about last week. There's been a lot of reports on, like 60 Minutes and others. I don't see how people are taking this conspiracy theory the way they are, but I understand the mood of fanatics, and that's how they operate, and that's what they're trying to capitalize on. But I think both parties really need to take a page out of Romney's book and come up with a pragmatic approach to solving the problems and working together across the aisles, because I suspect that both the far right and the far left will come out of this election weekend. And I think the middle people will be moving there more quickly. And I think that would be good for the country if we do that.
Thank you.
One of the ironies,
Go ahead, Joe.
one of the ironies is a good friend of mine, his West Point classmate of his is the Secretary of State for the state of West Virginia. And first thing he did was he put the whole election process on the blockchain. And it's ironic that when we're talking about crypto blowing up and election integrity, there is overlap there, and it's actually getting implemented, and it's all the perfect application of, and there's a solution that's already in place in voting right now in West Virginia. But my fear is, I was talking to my friend, and my fear is the existing political machines of both parties, the machine, the consultants, the folks that make a lot of money off of the fear over election integrity or their ability to manipulate it, don't want election integrity. The election industrial complex, or the political party industrial complex, probably doesn't want it, because there's a lot of money to be made in both the getting paid to manipulate and or talk about solutions versus actually solve the problem.
So I'm glad you were the first to talk about this, Joe. You see on the screen, you gave me the last panel topic. We were talking about where to talk about crypto, FTX, and other things. And we thought if you bring it up early, it'll just sideline everything else. So we're going to talk about it. We're going to bring some interesting people to talk about the elephant in the room, but we're going to wait until the end. And by the way, look, I feel like I'm the only independent anymore, and you have to pick a side. Like Romney, I work for Bob Dole, and that's a guy who you drink a beer, you reach across the aisle, you find solutions. We got to find the middle ground again. Anyways, so other questions for Stephen or anyone?
Mark, I think Joe's point about blockchain and the people using blockchain and crypto, not on these calls, but the public, not understanding the difference between the two of them quite as well, I think is really, an important element of where technology is going to work going forward. And that's, to Joe's point, solving technology that solves problems is going to matter now, where over the last couple of years, it was just technology, new technologies mattered. We put values that were ridiculous on things that were interesting, but not solving problems. And I think when you have the financial stress that we have, you're going to start solving problems with technology much more aggressively, and that's where the money is going to go.
You know what I think? I think it should and could be going to deep tech, real tech, not this like flavor of the month copycat tech that's not adding any value to society. In fact, it's devaluing society.
Mark.
Hey, Stephen, I got a question. Oh, sorry.
Just very quickly on that same subject, I'm actually teaching a class at this new University of Austin called Principled Venture Investing, which is both investment principles, so we can actually fix how we fund and deploy capital to innovative companies across, more efficiently and with more efficacy, but also first principles, which is exactly what you just touched on. So I'm actually teaching that and at this new university, and it's absolutely critical. And I've got a body of work on that if anybody's interested. So.
Oh, you're gonna touch on that in as we rethink asset classes. You're gonna posit some of that. So go ahead, Duggan.
Hey, Stephen, you were bringing up the point that I think there's been a growing acceptance of the inflationary impact of the energy transition and the supply chain.
Yep.
And just watching a couple of interviews on Bloomberg last few days, seems like some investor types are starting to basically say, yeah, we'll get inflation down, but it's going to be like 4 instead of 2. So I'm curious what you think the impact of that is going to be on Fed behavior. I mean, Lyle Brainerd was on just yesterday reiterating this 2%, fallacy that they're not going to get to. So they seem like the only ones in the marketplace that don't understand they're not going to get to 2%. So how do you think that'll play out in terms of what they do in the next few meetings if they go into a pause, and how the markets might respond to them taking another, shot at getting to 2%?
Great question. First of all, I'd be careful with reading too much into whatever the anyone but Powell, Dudley, and one other, the other vice chair they're the ones that you really want to follow. The rest are setting the messaging to kind of regulate the market for bullish or bearishness around their raising rates or cutting rates. I think it's a lot of it's coordinated messaging that the committee is doing. It's also people talking up what they want it to be for the next meeting. So I wouldn't read too much into what the talking heads say from there. We don't have long enough of a data points to say that inflation really is coming down for them to start to change too much of what they're doing, because you can see the numbers bounce back pretty quickly. And we've seen that over a couple of the reports. So as long as the wages keep wage pressures remain high, I think they're going to end up with it's not going to be 2. Will it be 4? Who knows? I think it'll be, but it'll come down from where we are. And we're definitely going to see the numbers come down, but we can be at 3 or 4%. We've been there before. It's not a number you want to stay at for very long, but I think it's not unrealistic for them to be moving gradually down towards that number. You could see one big step function down as we get some changes going on in the supply demand issues that we've been seeing. And also if we get through the winter in a little bit better shape, you can see the numbers come down. But I think the Fed's stuck with a higher number than they would like to admit right now, but they can't admit that they need to have raised the number yet. So I think, Duncan, you're onto something, but I think it'll come down more than people think.
Stephen, in your employment numbers, obviously groups like this are good at separating headlines from reality. We all see the hiring freeze, the layoffs. But if you look across the board, do you see a trend that goes beyond this really sort of small group of companies?
Yeah, I think everyone's. I think every company right now is pulling in their oars. There's a lot of offers being rescinded around in different industries right now. There are some industries that are still having shortages, but I think the push is right now going to be, how can you do more with fewer people? And I think you're going to continue to see that. If you're really short-staffed right now and weren't in the overhiring mode, then you're going to just hold where you are. But a lot of companies felt the need to overhire the last couple of years and got ahead of themselves. And some of them, their businesses just have been eviscerated. So I think you are seeing on both sides, away from just the big tech companies, more and more layoffs starting to happen. And I think the hiring freezes is the other one, because that slows down people from jumping jobs. And I think that takes some of the wage pressures off. So I think we're in one of those periods where there's a lot going on that, that you'll see on both sides. But I think in general, the trend is not to be, people aren't rushing out to add staff. They're not rushing out to increase their hiring roles. What they are doing is looking to upgrade. And even if they have to pay a little bit more to get better quality, they are doing that right now for the race for talent, because you can be more productive that way as well. But I don't think we're where we should be yet, where we will end up yet on the layoffs. And I think the ball's starting to roll down the hill and starting to pick up speed. And I think that's one of the issues that's coming.
So far, that all sounds like good things: higher productivity, less overhiring, more rational expenditures on the cost side. I mean, I
We're
don't
a
know about the future.
consumer-driven economy. So,
Well,
yeah, that's the other part of it, which we could use to slow down in consumer spending to take some of the pressure off the system. But people out of work add pressure to the system too. So it's a tough one.
yeah, wasn't the layoffs coming? Who knows? But you're right about that.
Economists will tell you that when you look through history, the only way to lessen structural inflation, which is what Steve laid out, is through productivity gains that are the result of innovation. That is the singular way to halt structural inflation. Everything else, raising rates, these are sort of playing whack-a-mole on structural inflation that has its own collateral damage, right? Raising interest rates and less people working to lower consumer spending to lower inflation is not an optimized tactic. And I think some of the structural inflation is, many of us know, the offshoring of our manufacturing base. We don't make stuff here. We sell shit here very well, using a lot of technology to sell more shit, largely that people don't need. But secondarily, my pedestal has always been, we've been also had a misallocation of risk capital to stuff that didn't add productivity gains, just help sell more shit to more people. And so those are the larger issues to me structurally. Is it is like Mark was saying, deep tech actually makes stuff and apply technology to solving real problems where we can find productivity gains that result from the innovation, not just using technology to sell more shit to more people.
But we're so focused on the near term. That's right. That's part of what, like, Esther Dyson was talking about so many times. We need it's a paradigm shift. I don't know if we're really, China does it. They have the 5-year plans. They just don't have our dynamism. But if you could find the middle ground. Adam, did you want to say something?
Yes, Stephen, great presentation. Thank you.
Yeah.
It seems like inflation is transitory after all. I wanted to follow up on two things.
You had to do that, Adam. Okay.
Hey, I was an advocate of transitory as well, let me tell you, and I still believe it is. I'd like to follow up on two things. One, following up on what Joe just said about the structural inflation, innovation, increasing productivity. And the slide, one of the points that you made, Stephen, was green transition will be inflationary.
Yes.
How is it that I'm trying to square
But
that
isn't it
with
both, even?
innovation?
It's inflationary in the initial stages because the cost and the efficiencies aren't there yet to get the return, because you're not producing enough units and with the scale that you need to keep the cost down. So you're running basically multiple systems to provide your energy. So just if you think about it, if you're just running oil, for example, and now you're saying, all right, we're going to add oil and gas and nuclear and this all through the same system, that increases the costs. And that's really what you're seeing is you're creating redundant systems to run parallel while you're trying to bring the cost down. It just doesn't work. We're not putting enough money to any of the things to get them to scale fast enough because we're not pushing it through on a scalable way. We're kind of testing a bunch of things. And that actually is where a lot of the inflation comes in. If you think about just like the car chargers, for for example, where each auto company can set up their own charging systems. And that's part of the process. We don't have a uniform way to do it in the most cost-effective way on a broad scale. Each company is trying to do it the most cost-effective way, but to implement that on a national or global basis is just going to increase the cost in the initial stages. It should get to where you get the scale down. But right now, instead of doing it an orderly transition using both, we're kind of fighting for the same dollars, and that's just not very productive.
Thank you, Stephen. Makes
With
sense.
respect, there's an intrinsic inflationary element to this whole thing as well, which I would submit to you is much larger actually than the kind of thing that Stephen was just talking about. So you're going to move to these alternative energy sources, and they are simply more expensive. And they are more expensive even as you move down the cost curve. There's nothing can be done about this. It's life. So it's going to be inflationary.
And same with reshoring is when you're changing supply chain systems from the most efficient to the most safe and secure, you are actually going the opposite direction and adding cost to it by design for safety and security and reliability. So I think that change is a big change that we have to acknowledge is going to happen and increase costs.
So the interesting thing there, Chris, is sort of like short, medium, long term, and then we have to throw "we're at war" into it, right? And Germany, which Carson, by the way, we had a really interesting event yesterday. I got up at 2:00 in the morning for Singapore, and we were talking about energy transition and costs, and Carson, admitting that how Germany takes a lot of its gas from Russia, and how you deal with that in the short, medium term. It's really the shells, and it's the industrial complex of Germany that has to help them transition, and they can't be your enemy. They need to be part of this goes back to political solutions and commercial solutions. We need to have no one should be an enemy unless you're like human trafficking and all that stuff. But to throw the oil and gas industry under the bus, they're actually the ones that have the infrastructure to enable the future. Actually, Eddie.
Actually, there's a point here I'd like to throw in here that we've never talked about on this. I was looking at this over the weekend. There's not enough storage in Western Europe. There's a whole hell of a lot less gas storage proportionately in Western Europe than there is in North America. Why is that? Well, they've never needed it. All you've had to do has been turn up the tap, so to speak, and more Russian gas is going to come in. And because
the other reason is subsidy. The other reason is they've never subsidized energy in Europe.
Well, you don't need to subsidize storage in North America. It'll pay for itself. It does pay for itself.
But you're right, Chris. He's right, because they never envisioned it, because the paradigm was we're just going to have this long-term pipe gas.
Yeah. So now, in order to make an incentive for people to have to build more storage in Germany, let's say, there has to be a pronounced seasonality in gas prices that will give you the incentive to build the storage.
Yeah.
Otherwise, it's a phenomenal expense with no return.
But Chris, they built a massive amount of storage in 2022. Massive amount.
No, it's not massive. It's just massive compared to what there
Relative
was.
to what it was. Yeah. It's not like the US.
Yeah.
It's
Well,
there's some floating storage, but that's not efficient.
I would say that a lot of that storage in Germany also was owned by Gazprom. Yeah.
Yes, that's a different problem, but yeah.
And you also have the refinery Rosneft Germania that has also, the Russians have
You have to say that with a good Ruski accent, right?
Конечно. So
Adam,
they
didn't Germany take over one of those yesterday?
they took over Gazprom Germania, the storage facility. Rosneft Germania is in play. I'm not sure that it's been taken. I think it was taken over actually by the German government. And that's going, both of those are going up on the auction blocks.
Well, we'll have there's only one industry that I wanted to highlight, and I think it's so important, is that energy transition. So you'll have the oil patch talking to the European hydrogen guy. I was gonna ask Eddie for you to you're sort of a bridge, what you've been investing into. Do you want to speak to that at all?
So we invested in a company that converts gas to gasoline, which would be an extremely interesting option for Europe as well. And it's also an interesting option for the US. Large scale projects, essentially transforming syngas into methanol into gasoline in a renewable way if you use renewable gas. So that's those types of plays, and instead, you can look at it as the renewable gasoline market, which will there's a couple of companies which will now be playing in the space. Will have had a massive boon from the IRA, from Biden, because of the RINs credits and the specific California credit, and so that will be a vastly growing marketplace in the coming years. And then together with the hydrogen market, which is also one of the byproducts of this play. And green hydrogen will also be an increasingly big market.
So the key is to keep your eyes open. That's how I met Chris White. It was on a gas to liquid project. I won't mention it. One of the few clients that I've fired for lots of reasons. Actually, for the similar reasons of what happened with FTX. But remember that, Chris? They built that plant. I don't want to talk about who.
Oh, yeah.
They built, no, different Chris, sorry. I want to hear from you too, Chris Mayo. They built that plant, but you take the good, not the bad. I took the good with meeting Chris White.
That
was in Trinidad when the gas
That
was
was
$2 versus 12. But
those guys were much better at raising money than anything else. And you see a lot of people like this that, their real gift is, it's getting financed.
Well,
They're
look,
con men when you get right down to it.
And what if you could create your own currency and do it as well, and use other people's deposits at the same time?
That's even better. I must admit.
And then keep spreading it around, not only the lobbyists, but to buy into, all these other, you put your fingers and pulses on something. You're just you create your own steroid. What just happened is just, we have to do a debrief on this one.
It's interesting that you say that, because people talk about crypto and what just happened here. It doesn't look to me like it has much to do with crypto at all. I see it more like you just outlined it, Mark. It's just a sort of a con on uppers, and it happened to be in the crypto space, but it looks familiar.
Well, look, there's some people who are Web3 and blockchain are here to stay, and they'll need their currencies. But that was just, and I'll leave it at that for now, because that's why we're putting as the last subject of our event in New York, so that we don't side trap ourselves. Sorry, Stephen.
Did Fortune magazine have him on the cover as the next Warren Buffett not too long ago?
Well, plus they were talking with someone that posted, they had the woman from Theranos on their cover too. So
do you think if I come to your next event wearing shorts that people would understand the joke?
That was good.
Well, they would understand it, but that would be a different issue. It would be different.